Greetings, everybody. This is Jeff Scott. It is actually where I'm at, 9:30 p.m. on Sunday night, but since it's only 10:30 a.m. back on the East Coast, obviously futures are not out. I'm doing this from Bangkok. I'm making my final couple days of my vacation. I entitled today to Friday's reversal signal, the death of the bull. Clearly, if you had any long positions left, which I did, you were hammered on Friday. I should have known that was a bad sign when my son called me up early in the morning or texted me wanting to know if it was time to get back in because he had some FOMO, fear of missing out. And I should have realized that was a topping signal in itself. As always, this is for educational purposes only. I appreciate all the notes people have sent me, thanking me and telling me what they like and don't like. Continue to hit the like button and subscribe on YouTube. I don't get anything, but at least it makes the numbers look better for my ego, I guess. I'm a doctor, not a broker. Most physicians lose money with their investments. I am independent. I pay for all the tools that I use, and trading involves risk, and you alone are solely responsible for any investment decisions you make. So, kind of an update on the vacation. We've started in Hanoi and went up to Halong Bay, which showed pictures a couple weeks ago. Worked our way down to Hue, where we saw the Citadel, and then spent some time around the DMZ on both sides, some tunnels in north of the DMZ, as well as Khe Sanh and some of the other sites that I learned about growing up. Then we ended up in Saigon. Since the last video, we went and visited the Cu Chi tunnels, which was cool. I think my wife laughs about this picture because I'm bigger than the tank. In all reality, I don't know how 4 people fit into those little things, but that's a U.S. tank that got hit by a mine, and all the stealable parts are gone for scrap by the locals. The Cu Chi tunnels are where the VC, and it's within the Saigon area. It's kind of scary how many VC and VC leadership were based so close to the Americans in Saigon. This was a tunnel. That's our guide and my wife, lovely wife in that picture. The War Remnants Museum, we went and visited that in Saigon, or Ho Chi Minh City as they like to refer to it. And it's interesting, it's not the Vietnam War to them, it's the American War, where we are clearly vilified. We're the villains in that war. But it was a pretty interesting museum. We really spent a lot of time, an entire floor, about Agent Orange and some of the outcomes both within the servicemen and their family and back in Vietnam. Then we got on a plane and went to this place called Siem Reap. Siem Reap is known for what you see in the background. That's just a small piece of the walled city temple area of Angkor Wat. Unbelievable. I think it's UNESCO's called it one of the true wonders of the world. Built in the 11th and 12th century. It's unbelievable. That's Angkor Wat, and around the corner is, well, I'll get to that in a second. Outside Angkor Wat, we met this guy, Prim, and he was a survivor of the Pol Pot regime. And so we learned a lot about the Khmer Rouge and what they did, and had some tea with him. Angkor Thom was built 200 years or so later. It was interesting, the religions in Southeast Asia, which I'm not a student of religion, but they went from Hindu to Buddhism, which apparently is relatively common. And Angkor Wat was built as a Hindu temple, converted to Buddhism. Angkor Thom, which was built subsequently, was built as a Buddhist temple. When we got there, they said on Friday we'd have a 5 a.m. pickup to go to pick a sunrise over at Angkor Wat. And apparently there's a couple times a year when the sun rises directly over it, and not off to the east or west, north or south. And this was just a picture of the sun rising above Angkor Wat. I could have done a lot better if I had a tripod in time, but we took a bunch of pictures, as you could tell. And now we're in Bangkok, and it was funny. My wife's going, "Why are we going to Bangkok?" Until today, we went and saw Some just amazing temples and palaces. Yeah, all right, she just added that the rest of the city is a dump. Yeah, imagine New York City with a lot more poverty, no Uber, cab drivers that don't want to take you where you want to go. Um, it's, but the temples and the Buddhas are very nice. So I'm going to try and go quick today because she can't go to sleep until I finish. And we have an early day tomorrow. But I always start off with my influences, and those who've been here before know I started in Can Slim, really took my trading to a different level, or my understanding with Ian Woodward and HGSI. Got to be friendly with Gil Morales and Chris Catcher, the O'Neill disciples, the Bible Gap Ups, Pocket Pivots, George Lee in the lower left-hand corner. Unfortunately, because I'm in the Southeast Asia, I wasn't able to attend and participate in his meeting that he's doing this week in Orange County. Van Tharp, the king of position size and money management, really helped me understand that aspect of trading. And then I met John Person. First, I met his son and bought some indicators through him from John, and went to a couple of seminars at Traders Expos, and then I forked over the larger check and went to a live 3-day session. I've really learned a lot from John, from his books, his tools, his live meetings, his mentoring. And over the years, I've learned to play golf from John and his wife, and we've become close friends. I highly recommend his stuff. And, it's one thing to know what stock to buy and maybe even how many shares to buy. It's another thing to know whether you buy a stock or an option, which option you're going to buy, and how you manage the trade once you're in it. And then Cigar down in the lower right-hand corner for Superior Profit. I love his tools. And it turns out he lives in Thailand, and he came down and met me for dinner yesterday, which was awesome as well. I have a lot of tools. I talk about what I use, and I got to update this slide because I end up doing the same thing every week. Let me just pause it for a second. I think, like everybody, I'm looking for the perfect tool that tells me when to buy, when to sell, how much to buy, and makes me money on every trade. That tool doesn't exist. That tool has got to be you, and it's got to be the education and the learning that you've done. But I have a lot of tools that I use to help me. Most of them are indicators in the TradeStation or Thinkorswim. HGSI to me is my core analytic tool. I think those that follow me know why. EdgeRater, really, it started to me as a backtesting tool, but it's evolved into a tool that it interfaces so with HGSI, and a lot of things that I used to have to build macros to do from HGSI are automated within EdgeRater. Sager's company Superior Profit, both indicator sets for TradeStation and Metastock, and the freestanding Q tools, and then a number of other things. And TacticalTrader.com, or The Tactical Trader, I think it actually, is a website that has taken the TradingView platform and has built some really cool scanners and other products into it, and then is now taking third-party add-ons. So that's another tool you might want to take a look at. From HGSI perspective, here's the website. I don't get paid if you subscribe. The only thing that benefits me is I know that I can always call up George and work on new ideas that I might have and get them incorporated. That's the payment I get from being a big supporter, and I like it that way. Stock patterns are cyclical, and here we are again. We have clearly rolled over, at least for one day. And will the Mueller report, which did not indict anybody, cause the market to shoot back up? Will the saber rattling from Congress, specifically the Democrat-controlled House, cause the market to fall down? I'll talk more about that later. My guess is we've probably seen the highs for a while, but I'll come back to that. So if I think that we're in a dangerous position, then I'm going to manage my portfolio differently. Hold on one sec. So by changing my approach, as I see what the futures do on Monday, I'm going to shift over at least to neutral and let this market play itself out. But neutral will mean I'll keep some of my longs. I'll add to my short positions. I actually did some butterflies with some puts I like them because they're really cheap, very limited risk, and it's a way to capture some downside. Um, Anytime you have a short position covered, you limit your gain to the short side, but it does reduce your cost. But I'll probably be shifting more and more to that side, whether that means buying puts, selling calls, shorting stock, contra ETFs, all the above, bear call spreads. If I think this market's turning over, which it certainly looks like it might. Friday sector review, and I thought it would be all utilities, but when I did my bottoms up, there were a lot of consumer staples that looked strong, and no surprise. We'll talk about why, but it's interest rate driven. Real estate had some interest as well. Major markets tell a story, and I think that the 10,000 foot view here is enough. You've got sell signals came in on this is a person sell on the S&P futures, the Dow futures. The Russell came in on Wednesday. Interestingly, the NASDAQ has had what Guy Cohn called a railroad track day, but has not triggered a sell signal. The VIX popped, and we'll look more at that in HGSI, and the dollar rose, which is not good for the market as well. So clearly a big reversal day across the board. Looking at the weeklies, it doesn't look nearly as bad. You've got some shooting stars on the E-minis, on the NASDAQ futures. The Dow futures, the Russell futures are the first to have rolled over with a sell signal a couple weeks ago, in the VIX and the dollar. So clearly the market changed on Friday. Whether that change is permanent or permanent for a while or is a one-day wonder remains to be seen. One of the things I like Genesis for is this view where I have E-minis, NASDAQ futures, Russell futures, NYSE, and the Dow futures. Top row are daily, second row is weekly, third row is monthly. If you look at the dailies, clearly reversal candles across the board with sell signals on the daily everywhere except for the NASDAQ. If you look at the weekly, you've got sell signals here, and they're a little different than on TradeStation. The Russell futures, the NYSE, and the Dow futures, not yet on the S&P and the NASDAQ. And you can look on the longer term monthly, except for the Russell, you're in buy signals still across the board. One of the things I do as Cigars tool is during the day I have this on, and it gives me a sense of what the market's doing. And it's a top-down approach. This is his Q Edge. It needs Thomson Reuters metastock data, which is a problem, because unless you have it, there's an added expense to get real-time. End of day is relatively cheap. If you look at in red or in magenta, you see one-day performance. The only thing that was up across his tools was utilities. You could see staples were down and real estate were down, but we're down a lot less on the one day than things like energy, which got clobbered. If one looks over 5 days in brown, what was up over 5 days? Utilities, real estate, energy, and nubbin. Energy really turned this week and went from a strong performer to weak. In fact, if I look at the sectors this way, this is 1, 2, 5 day performance, 10, and then monthly performance going out a year. Blue, the lighter blue, the stronger the group, the darker the red or magenta here, the weaker. Utilities and staples were at top on when you look at over a 1 day window. On a 5 day window, they were strong as well. And look at energy. I guess with worldwide economic slowing, that reduces demand, and demand supply determines energy price. And look what energy did the last 2 days. Now, I looked at this and I said, well, staples look interesting. I hit the checkbox and I pulled up and I said, over the last 5 days, look at how personal products, which were horrible, turned around and now have one of the stronger scores. So I clicked on personal products and I brought things up, and the light blue here tell me that these stocks are fairly valued or undervalued. The darker red, overvalued. And this is not a group that I particularly like. There's not a ton of growth in earnings here. There are some big dividends, and I would probably look at Nu Skin and Coty. They pay big dividends. They're fairly valued. They're not growth stories. They're more value story and a dividend play. If I look at my Thinkorswim sector analysis, which was all green, I believe, last week, you can see financials, industrials, materials, healthcare, real estate all turned red. And really, the big winner still is utilities. Now, let's talk about why. Rates dropped. Now, those who know me for a while, I've got two lines here on the 10-year. When we go above the top one, it means interest rates are getting high enough that they impact on the market. When we drop below the bottom one, it means the economy is slowing down and rates are dropping because of it. We drop below that line. I think that is something that bothers me because markets perform weakly during periods of time that the interest rates drop because of a weak economy. Even the 30-year bond has sold off a lot. Now, the lower rates should be good for REITs, MLPs, utilities, dividend payers, and home builders, and bad for banks. Hard to see, but I can tell you that the spread on the 2 and 10-year is not gone to inversion yet. That's when it gets to this pink line, but it really took a hard move down this week, getting closer to inversion. And that's, I think, spooked the markets on Friday as well. Now, the AD lines really didn't move much this week. They're still near record highs despite the sell-off in the market. And if I look here on the NYSE, you can see it's right off its highs. Yes, it's come down some. And these are the major market ETFs. They're color coordinated here, the diamonds, Qs, spiders, Russell, transports. And then down here with falling rates, you expect bonds to do well. And I think a lot of people were surprised by the rally in bonds this week. Breadth remains strong. Well, I probably would have changed that to say if I was paying attention earlier, strong, but less so. In fact, by some measurements, such as the buckets, hit the wrong way, by some measurements, such as the buckets, we are pretty oversold in the market, at least on a very short-term basis. 3-month new high, new low came down considerably as well, reflecting that. No signal from the McClellan. Last week we talked about some divergences, and I think those divergences played out, and we had 2 zero-line rejects on the daily, again showing the failure of the market to turn around, a zero-line reject on the weekly as well. Talk about the buckets. We now have 22% of the stocks are trading below the lower Bollinger Band. That's not to the point where we have to reverse, but it's at a point where I start expecting a reversal. 2/3 of the stocks, 70%, are trading below their midline of their Bollinger Band. What to me is most dramatic is if I take a look at my trading universe, and I think there's 2,200 stocks in my trading universe. $5, 500,000, no ETFs. You can see we're approaching 500 stocks out of that 2,200 that are below the lower Bollinger Band. And notice over the last one day how that number has grown from 100 to 500, while the number of stocks above the Bollinger Bands, as we were getting more and more overbought, from 400 down to 100. So this market had a huge move on Friday. No Hindenburgs yet, and that's no surprise. You have to typically be in an extended market. Now, the interesting thing is on the NASDAQ, we're just shy some new highs, but I wouldn't expect a Hindenburg this week either. Market tone, we had a line of red here, which was kahunas to the downside across all the major markets, and that was enough to start putting some red and some danger signs on the Woody indicator. Now, I did notice last week that we've gone from straight green throughout, which is a very bullish signal, to this more choppiness, and I think that was certainly a precursor to what happened. And no surprise, sector strength deteriorated as well. Canaries in the coal mine, they had a great week up until Friday. In fact, they got up to the 200-day SMA, tested it, and failed on Friday, so still remain range-bound. Now, I put together an index of leaders almost a month ago, and they pull back to their 17, just below their 17. And they did this before, and the question is this the end, and will they come down and tell me that it's time to get out of this market? You notice this here is a Eureka that's on the market, which is a sort of a follow through to the downside signal, a big signal. The volume here is barely above its moving average, and certainly much less than on some of these bigger days where we had the moves in the past. So I'm going to say not broken yet. Know your news and earnings, a mixed week. We've got some GDP, jobless claims on Thursday, personal income on Friday, some trade numbers and energy numbers on Wednesday, housing starts on Tuesday. I see we got a Fed head speaking on Wednesday, Esther George. We have James Bullard speaking on Thursday, John Williams, Raphael Bostic. So there's some Fed head speaking, so we'll put this as a medium. I think because of the Mueller report, it's probably even more of a news week. And again, this is old. I now use Econo Day instead of Bloomberg. And then there are still a lot of earnings there here. You can take a look. As I say in the lower right-hand corner, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. So markets grinded higher at the beginning of the week, had a broad-based reversal on Friday. Generalized slowing worldwide economic growth is spooking the bulls, while perhaps the Fed downgrade of anticipated rate hikes has driven concerns in the U.S. as well. Falling rates have hit hard the big and small banks while benefiting utilities. Might anticipate this to impact on housing stocks, dividend payers, REITs, and to continue to support the utilities. As I mentioned, the Mueller report came out after market on Friday, perhaps a spooked market participants as well. Now the battle between the House and the President can start in earnest, although there should be some relief and fear related to a report with no further indictments. And the market's very oversold on a short-term basis. I would not be surprised to see a bounce early in the week, but there's lots of damage here. An inversion of yield curve and broad-based economic slowing. This is not the environment that one would expect a rip-roaring bull. Thus, I'm going to turn more cautious. And as I mentioned earlier, that means further reduce my longs, add to my shorts, and take a more balanced and perhaps after anything that happens on Monday or Tuesday, probably unless the market has a brisk recovery, starting to lean more to the bearish camp. All right. Let's quickly work into TradeStation. All right. This always happens when you change your resolution. Come on. Here we go. All right. So I like to look at a couple of signals, 5 or 6 different things to give me a sense of what's going on in the market. We'll start with the E-minis. Number 1, it has a new sell signal on Friday. That's bearish. Longer term, it's in a weekly buy and a monthly buy. Number 2, the candle went to red. A red candle on the Elder Impulse Indicator says it's okay to be short or hold. I shouldn't be entering a lot of new long positions. I agree with that. Third thing, I'm in between the envelope, which is good. Fourth, do I have any evidence of MACD divergence? Well, I had MACD divergence here, as indicated by these red dots, but it's already sold off, so it doesn't matter anymore. 5, what is my weekly bongo doing? It's still a buy, which is the middle one. And 6th, where is my high jump bar? And what did my high jump bar get to, out of curiosity? Got to 95 before it rolled over. I like that high jump bar because when it gets to those points, you can almost predict the market's going to reverse. I'll contrast that with the NASDAQ, where you'll see, it's funny, the last time I looked at this, I actually saw my little buy signal. There it is. I knew that buy signal was there. It was just being obscured. NASDAQ's still in a buy on all 3 time frames. It's gone to blue, which is neutral. Has this MACD divergence that tells me to be concerned. It's at 84. It got to what? 96.60 when it pulled back some. So I think the NASDAQ is stronger than the E-minis today, but it's still at risk of a pullback here. The Dow futures in TradeStation, its sell signal came in on Wednesday. Notice there's also a weekly sell on the Dow. If I look at the Russell futures, similar Wednesday sell signal, daily sell on the Dow. So these are clearly at risk. We drop down and take a quick look at the US dollar. You see it had a buy signal coming on Friday. So the market's clearly changing with some of these large indexes making some dramatic moves. Let's just take a look at in HGSI, the top-down view of the major markets. And let's look at industry groups. So I'm going to expose you again to something that I've been working on. It's not available yet. My intent will be to make this available as a potential add-on. I still got to get some people's permission. 176 securities. So I have a new indicator which looks at trending stock. It looks at a buy signal when there's a trend reversal. And I can look every day and get an idea if it's trending up or down based upon that signal. And so let's just look at a force incorporating my trend. So I can tell you, let's see, every time I play with resolution, what I want to show you goes to the other place. So there were only 3 industry groups out of 174 that showed a positive force after close on Friday. Those 3 were precious metals, integrated utilities, and home builders. Metals up probably because of risk, the next 2 because of falling interest rates. I could tell you that right now, 87% of precious metal stocks are in a uptrend, 13% in a downtrend, and I can start to look at how many new signals fired on a given day within an industry group. If I right-click on precious metals, and we want to start looking at what's here, and I'm going to open up Barrick Gold and show you what I think is really cool. Got to change that to I can tell you that within the precious metals, 87% are in a buy, 13% are in a sell. These are the new ones that came in, and it's allowing me to incorporate some of the tools that I've been using in TradeStation, although I'm not going to put a name on them yet. Now, before I do all that, let's go back to the Major Markets Plus. Let's look at the major index groups and talk some more about the markets. Leading was bonds. I showed you how they moved up. But let's just take a quick look, because I like this to be my, well, it is my standard of what I make my calls on. So as you can see here, I'm going to my new index view. Perfect. This is a chandelier stop, which will be coming out if it's not out yet in HGSI. Notice in the prior downtrend, once it broke through on green here, it stayed down until the market reversed. So S&P 500, new sell signal, the Jeffrey sell signal, which is here as well, a Eureka on the market, and a Kahuna to the downside in a squeeze. That's not a very bullish looking picture here. I like to talk about my 3 Ian's 3 scenarios of what might happen. So here's what I would look at and what I'm expecting for this week. Scenario number 1 says goes right back up to those new highs, backfills, and continues on to new highs. That would be scenario number 1. I'm not feeling that. Scenario number 2 is we go right back down and retest down here. I'm not feeling that either. What I think will happen is scenario number 3, which is a little bit of a move up and then a slow pullback, and then a big decision will have to come in when it gets to that 200-day moving average. And that is going to tell, we either bounce and resume an uptrend, or it's time to be to the short side of the market. So right now, all I could say is that we had a horrible day in the market on Friday if you were long. We've got new sell signals throughout the indexes, and a market that's certainly at risk. If I look at the Dow Jones Industrials, way down on the bottom of performance, similar pattern. If I look at the NASDAQ, it looks less, here's the NYSE, forget that. The NASDAQ composite still is above its moving averages, but had a big move down on Friday. And lastly, the Russell 2000, the weakest, it's well below. We do not want to see this happen in the S&P and the NASDAQ, because then you got to start worrying about, do I go all the way down and retest? Don't want to think about that, because that will be very painful. I'll hope to be very short if that was to happen. The dollar had a buy signal on Thursday, looks like a shooting star on Friday into what might be resistance with this chandelier. That remains to be seen. A weak dollar would support the market. A strong dollar probably will hurt the market. The VIX, a big spike into that chandelier and pull back to that 200. As far as I'm concerned, it's still in this range it's been in the last 2 months, but obviously more concerned that it's at risk of breaking out. Gold and silver real quickly. Gold had a little bit of a move up. Let me switch to an easier view to see it. Had a doji on Friday, a little bit of an up day, not much with indecision on the dollar. As I mentioned, gold could also be looked at as a defensive play. And then silver, doji as well, but on a down day. So I don't see anything that makes me real bullish about this market right here. As I was looking before at the industry groups, where we have 176, looking at the force down, force up rather, let's get this right. Now we've got 4 groups. When I switched around the filters a little bit, adding packaged food, another very defensive play. So what I might do here is I might right click. Let's see what happens here. Yeah, I have to figure out why that 4th one comes in. Right click on precious minings, which I did before. Just look at a couple of these. They've not been great performers of late, clearly sideways moves. American Barracks is having a nice move off of a buy signal, a big kahuna, increasing volume. Again, probably also a defensive play. Now, one thing about Barracks, I believe they are, I could be wrong, but I believe it's them that are in acquisition discussions with Newmont Mining. Speaking of Newmont Mining, very similar pattern off of its moving averages in a squeeze. Look at that big volume that came in on Friday. Again, how much of this is defensive? Wheaton, precious metals, silver play, a very nice uptrend, breaking out to recent highs. All-time highs are back here closer to the 32 range, but certainly looking good from a shorter-term perspective. This might be a way to play precious metals. AU is another one I like. This one, like American Barracks, had a big move on Friday. Again, I like the fact that 87% of the stocks are in my buys versus 13 are sell signals right now. Integrated utilities, they should benefit a lot from falling interest rates. And if we look down here, 75 versus 25 are in buy signals. Here you have a big uptrend in a squeeze, pocket pivot, kahunas, everything is green. What's not to like? And it's the story of the utilities. They've had a run. They have very little to no growth, but they do pay a dividend. That's Nextera, Exelon, 2.8%, same exact picture. American Electric Power, ditto, 3%. Duke Energy, 4%. DT Energy, funny story with these guys. When I was 13, had my bar mitzvah, and my parents said I could keep interest, but I had to put the money into an investment vehicle. So I put all my money into Detroit Edison stock because my mom used to always yell at me because I left my lights on, and would follow that up with a, what do you think? Do you own Detroit Edison? So it turned out to be great because it pays a nice dividend, 3% almost. And I had that for probably throughout medical school. And every quarter I get a nice little check from my bar mitzvah money. So I get bored with these stocks, to be honest, because they don't have any growth. I'd rather be buying growth stocks. But right now the money's on these big dividends, 2-3% across the board. And then home builders should benefit from the weakness in interest rates. Several of them, I believe, have earnings this week and next, so it'll be interesting to see. Is this a growth stock in a pattern you want to buy? Well, I guess you could make the argument that the old channelingstocks.com argument that we're in a uptrend and it's a fundamentally sound group, pays a small dividend, not much growth rate. I look at this and I just don't see a lot of inertia on my part. But this is an area I want to be watching, especially if rates fall. Lennar for the down pattern, Pulte, looks like Lennar, LGI, it had a gap up and did nothing. Is it going to run again? Had a couple of kahunas. I gave a buy signal as well on Friday. KB Homes looks like the others. Meritage, M&I, MDC, Beazer. So the good news is these guys are likely to do well in a falling rate environment. The bad news is they haven't started. So if I've only got 3 groups to the upside, what do I have to the downside? Now, the other thing that the JAS does is in the combo rank, whoops, I don't want that. I want to open up this. I've added to this combo rank and heavily weighted, are you in a sell signal or buy signal, and then gave you extra weight if you had a move today. So I'm looking at a little bit more than just force here. And you could see, unfortunately, that there's 71 groups to the downside over the last 2 days. If you look at the 5-day up, only 4. The packaged food gets in there. If you look at the 5-day down, 176. So for the most part, take away that 175. Let's look at one way of the. Look at it this way: 87 are down on the 5 days. So you've got 87 to 4. This market clearly is pointing to the downside. So what groups are here? Steel, oil, gas, base metals, steel, specialty chemicals, IT, communications, life sciences, healthcare services, refiners. A lot of the groups that have been big movers over the last couple of months are here. Now, here's the part that should really scare you. Still, every stock is now going into a sell signal. Oil and gas services, 96%. On Friday alone, 37 flipped to a sell with my indicator with none to a buy. And you could see that these stocks, these groups have a high percentage of sells right now. So you look at some of these. Cleveland Cliffs, it's already broken down. Why would you want to be in that? BHP Billiton just starting to break down. Rio Tinto continuing to break down. And the group would look like something you'd want to short. So steel looks weak. Oil, gas services. Schlumberger and Halliburton had been in an uptrend, gradual uptrend, but they've really gone sideways and had sell signals with that eureka that came in the markets, kahuna to the downside, mobile breakdown on Schlumberger. Halliburton looks just as bad. And you see 37 new sell signals on Friday. This is not a group that's exhibiting any strength right now. Transition rig, Baker Hughes ran right up to the 200 and had a reversal and a new sell signal. Third one down, base metals. Freeport-McMoran, so higher dollar, slowing economy. Copper is not going to outperform. Here is breaking down here with a new sell signal. 100% have sell signals. 9 of them occurred on Friday. Alcoa breaking down. Southern Peru copper, perhaps a shortable place, failing at the 200-day moving average. So because I think this is a market that you might be best staying away from or buying contra ETFs, I'm not going to go deep down this list. I think you could see that this market has not a lot showing up to buy. And I think by itself, that means something. Now, that doesn't mean I didn't find stocks that I'm not going to put on my watch list. And again, what happens if I put a stock on my watch list? It means there's something I like about this stock. And if the market holds, it might be someplace I want to look at. So I'm just going to go through a couple of these. Now, I don't understand. Why did I pick this one? Skip that one for now. Nevro, this is a healthcare stock, had a Bible gap up on Friday, and now it's going up at a 45-degree angle. If this market shows any strength, then I expect that to continue. It's in the setting of a group that's got hit and now has predominantly sell signals. Verizon, you buy this when the market's weak because it pays a big dividend. Invitation Homes, they develop single-party dwellings. It's had a nice run, and look at the strength of this stock on Friday despite the market being so rough. First American is a mortgage provider, 3.3% dividend. It's at a great buy point. It's in a squeeze. It's pulled back to support. I wouldn't touch it until it got above my chandelier stop. But these are the things I'm going to be looking at if the market bounces. Fidelity Information, a big day on Friday. Multiple kahunas, pocket pivots. I had a buy signal come in on Thursday. Do you see anything great here? I don't. Here's a Bible gap up on Hibbett. Then it sold off throughout the day. Can't ignore it. And this is on my list to watch if the market shows any resilience. Home Depot and Lowe's, I like Lowe's better. High close doji here on Thursday. On Friday, it really had an inside bar that didn't do much. Here's a spinoff from Lilly, an animal health company. Closed up on Friday. Great earnings per share growth. Papa John's Pizza, obviously this has been a story stock with the founder and the company getting in big fights and the stock having sold off from 100 down to 50 at this point. It has been lower, but it had a Bible gap up on Friday. Darden Restaurants, again, now we're looking at defensive type plays. People still going to eat. Broke out on Friday. Lennar, we looked at as a home builder. I mean, when am I going to show you Hershey's? Just like Verizon, when I want to go defensive and I'm looking for a dividend yield here, 2.5%. Hormel Foods, why would I want to buy Spam? I don't, but I might want to buy a stock that pays a dividend that's in consumer staples and went up on a weekday like Friday. D.R. Horton, another home builder. Here's probably been the best gold performer of the year. Kirkland Lake Gold. It's up 29% from the beginning of the year, up 128% from its 52-week low. It had a buy signal on Friday. This has been a leader in gold. It's got good earnings per share growth compared to its multiple, just a nominal dividend. Here's another of those staple stocks. It was up on Thursday and Friday. Not much growth, pays a dividend. These are the kind of things that do well in this type of market. Same with General Mills. This one's already breaking out, 3.9% dividend. I hate these companies, to be honest, but they're the only things that look close to being good to buy because they're defensive plays. We looked at Wheaton already. Here's another defensive play, Conagra Brands. Basing here broke out on Thursday and Friday in a very weak tape, 3.2% dividend. There's your Barrick Gold. That's it. So what do I have on my list? I have a whole bunch of defensive play stocks. Let's see if I can find their industry groups. Most pay a dividend, and at least home builders, mortgage finance, precious metals, telecom carriers will benefit from falling interest rates. And I could have put up to 20 utilities. I'm just not a big utility guy, so they're not on my list. Now, the other thing I might want to look at is, what am I shorting? Or what am I considering shorting? Boy, were there a lot of opportunities. I don't even know where to start. But throughout this market, there are some weak looking companies, some of which I've owned for a while, some of which have had big run-ups. So Sherwin-Williams is an expensive stock. You know, if this stock trades below this 200 and this 50-day moving average, what's my risk if I set my stop a few bucks above that 200-day moving average? Very little. I've shorted this one before in times of weakness. That was one that looked good. Wayfair, like in Amazon, huge run up, makes no money. In fact, loses a ton of money, and sold off hard on Friday. Looks like it's going lower. So there are a number here on my list of stocks that I've looked at. Many of them are big movers, big winners of late. Tableau, Lexion, Arista, Chegg, Wayfair, Splunk. But gravity kicks in eventually. And all of these, like even Yeti Holdings, a great IPO. Yeah, when is this done? A big shooting star on Friday. Look at the weekly chart, if I can. Weekly chart had a reversal with a red candle high. Everything in its index is in a sell signal. On the leisure products, eventually this thing's going to come down as well. So let me just summarize. I found very few attractive buy stocks looking at 600 charts this morning. I found a lot of things that looked shortable or could become shortable. If you don't like to short, you look at contra ETFs. If you don't know what I'm talking about are, let's just open up a couple. Let's say you don't like the diamonds. So the diamonds are, if you don't want to short the diamonds, buy dog. Dog goes up when the Dow goes down. If you don't want to short spiders, SPXS is one instrument that will go up when the S&P goes down. If you don't want to short a bank, you can buy FAZ, a 3X ETF that goes up when the instruments go down. If you don't want to buy the Qs, short the Qs rather, you can do SQQQ. That will rise as the Qs fall. If you don't want to buy the Russell, short the Russell, you can buy TZA, which is a 3X short of the Russell. So within HGSI, you can find lists of the various ETFs, and you can identify the long and short, and whether you want 1 time, 2 times, or 3 times the movement. On that note, I think I'm going to say goodnight. I've had a great vacation. I'll be back in the States soon and resume or continue these. I keep telling you I'm going to skip them. I end up doing them. So you all have a great night and rest of the week, and I'll talk to you next week. Bye, everybody.